Hey, what is happening, Bulls and Bears? We're back. You're watching Bull, Boom, Bear, Bust. My name is JJ, and we are headed into the next phase of the economic collapse slash transition. And I'll explain what I mean by that here in just a few minutes. But first of all, let's take a step back and just talk about the big picture. The big picture is that the debt is unsustainable debt from every level, from the local household debt, consumer debt, to city, to corporate debt, to the federal debt. It's all unpayable and it can never be paid back. So essentially, the system has failed. The financial system is imploding right now. The banks that imploded back in March, that's just the tip of the iceberg. All the banks have been doing similar tactics, for lack of a better term, loaning out money they don't have. Technically, they're insolvent. What's keeping things propped up? Well, people don't realize what's going on. People don't understand that the banks are insolvent. You understand, but you and I, we're just a very small fraction of the population, right? So there's going to be a changeover ultimately. I'd say within 5 years, we're going to go back to a sound money system. That means precious metals, gold and silver, are going to be re-implemented, in my opinion, back into the financial system. Now, before we get there, and it could be much shorter than 5 years, but before we get there, there's going to be some very hard times to try to get through. And there's still a lot of people out there thinking that what I'm saying is not true, that this is not happening, and they continue to just bury their head in the sand and not see all the facts and the data here. So let's get into some more data here that tells us how this economy is actually imploding, but it's a slow motion collapse. Now, we could wake up and there could be everything goes dark. The banking system has been rendered insolvent. Maybe someone, compromised the system, so to speak. But think about the world we're going to live in if people can't access the credit that they need to survive, right? People don't have enough savings to live off of. They're relying on debt. That's why the levels of debt climb and climb and climb, right? So it's pretty simple when you just look at the numbers here. But let's get into this data here. And this is very, surprising. It should be surprising to a lot of people, but the people here on this channel, maybe not so surprising. In April, the bankruptcy storm got worse. April alone, the United States added another 54 corporate bankruptcies. 54. Wow. So that brings the total year to date to 236. 236 as of the end of April. So January, that's 4 months into the year. So 1/3 of the way through the year, we're already at 236 corporate bankruptcies. So for 1/3 of the way through the year, and we've already got 236, that's going to be over 600, close to 700 by the end of the year if we continue at this pace. That's worse than 2011, 12, 13, 14, 15, 16, 17, 19, 20, 21, 22. It's worse than all the other years after 2010, rather. I'm sorry. It's worse than all the other years since 2010. In 2010, the total was 828, and this year we're on pace for nearly 700. So think about that. 2010 was 2 years into what everyone refers to now as the financial crisis. 2 years into the financial crisis, and we're looking like we're going to hit close to those numbers this year. But guess what? It could accelerate from here. It could get a lot worse. I've just been telling you what we're on pace for, but who knows what this summer and this fall is going to hold here this year as we continue to see more job losses. And you don't think there's job losses. We're going to talk about that next. But first, a quick word from our sponsor. You need to protect yourself with sound money, hard assets. We'll see you on the other side for the next important news topic. Reign in wealth like King Charles with a gold IRA from Noble Gold Investments. Just as King Charles's magnificent gold crown symbolizes wealth and power, a gold IRA can fortify your own financial kingdom. Imagine the confidence that comes from a retirement backed by a tangible, proven asset, gold. An asset that's not at the mercy of unpredictable market swings. A gold crown may not be included, but isn't a future free of financial stress possess a worthy throne? Like royalty, enjoy the luxury of choice. Gold, silver, platinum, or palladium, the realm is yours to command. Fend off concerns about economic downturns and let your wealth thrive with the timeless security of precious metals. This month, the first solid quarter ounce gold standard bullion coin ever issued with King Charles III's image can be yours with your own qualifying gold IRA or 401k rollover of $50,000 or higher. You can't go wrong with Noble Gold Investments. Call Noble Gold Investments at 877-646-5347 to get started, or visit bullboomgold.com. That is bullboomgold.com. Link down in the description of this video. All right, next, let's get into this other article here. And now we have this here: U.S. weekless jobless claims rise to a 1.5-year high. The number this latest week was 261,000. 261,000 in just 1 week. Multiply that by 4, and you're over 1 million per month. We're back over 1 million a month for new jobless filings, right? So it was only a matter of time. For a while, they tried to tell us that unemployment was dropping, and we saw it get down to 3.4%. The whole thing was a big joke when we saw all these corporate bankruptcies, but we saw all these layoffs too, especially out of the tech sector, and we knew it was just a matter of time before even the fake manipulated numbers started ticking back up into the danger zone. So a 1.5-year high now for new jobless filing. Now, these things take so long to play out, these economic cycles or changes, that a lot of people just don't realize it. And that's why so many people got caught on their heels back in the financial crisis in 2020. We saw even people with 6-figure incomes basically having to get their mortgages modified and go into forbearance. They couldn't pay their mortgages, about 7.5 million households. And it was a moment of revelation. A lot of things were revealed. We saw how little people were prepared and how little money people had in savings. They had to send out enhanced unemployment benefits, stimulus checks, people not able to pay their light bill just after a few weeks. So that was another eye opener for a lot of people, that that most people are just not prepared for the economic situation that we're in, and that we're getting deeper into pretty much every day. Another Reuters article here: banks are tightening lending. Again, this is going to take a while to play out. The banks just imploded back in March. The tightening hasn't really been seen yet in the economy. It's going to take a few more months, but ultimately we're going to see softening prices, falling prices. Yes, real estate, automobiles, because the less people can borrow money, the harder it's going to get. Now, a lot of home sellers, they're holding out right now. They're not putting their home on the market. Inventory is still super low, but pretty soon all the home sellers that are waiting to put their home on the market, they're going to, I think, panic sell once they see what this economy is going to look like here the end of summer going into fall. And you're going to start seeing inventory rise, in my opinion. And from this article, it says right here: banks are likely preempting a slowdown in the business cycle and an increase in unemployment. As to why the banks are tightening, well, of course, because you also have the failures that occurred, and banks, the smaller regional banks, were not promised a get out of jail free card like the big mega banks. So naturally, that's going to lead the banks to become more cautious and be much more restrictive and tighter on their lending. And yes, just like anything, you're going to have to wait a few months to see this really take effect. But I'm holding off on buying anything because I think there's going to be some massive deflation headed our way. Now, on a different topic, this whole thing could break. It's all propped up by debt. If the debt markets implode, then you're going to see rates spike even higher, and this entire economic scheme comes to a grinding halt. So something could break in the debt markets anytime. We see rates spike. Look what happened with the repo crisis starting in 2019. Then again, just recently with reverse repo. things are very unstable behind the scenes, but again, you won't know it on the surface. But without something breaking, we're going to see this steady decline. The good part of that is it's going to give us more time to prepare, more time to get your assets set up to where you can survive this, and have some food out of the, have some food, have some money out of the system, have a few months of living supplies in case we do see this this whole thing come to a screeching halt and go dark. Could very easily happen. All right, let's get into some other news here. And this one comes out of Retail Insight Network. Dollar General, a discount store, Dollar General slashes outlook as core customers cut spending. They can't even afford Dollar General. From the article here, the company's core customers are tightening their purse strings in the face of worse than expected macroeconomic environment. There we go again, worse than expected. Dollar General was forced to reduce its full year outlook due to these challenges. Oh, don't forget, they also have a lot of shrinkage, aka people stealing stuff. Desperate people that can't afford stuff, stealing stuff. We saw that reported out of Walmart. We saw it reported out of Big Lots. And what was the other one with the shrinkage? The other one was Dollar Tree. I did a report on that last week. Folks, people stealing from the Dollar Tree. How desperate do you have to be? Just another sign that a lot of people are in big, big trouble. And if you think this is exaggeration, maybe you just haven't felt it yet. And that's actually a good thing. If you haven't felt it, that's a really good thing. I think a lot of people on this channel are probably smarter than the average person. So, maybe, you are, going to get through this and be just fine. So that's the goal, right? So if you don't feel it the whole time, and a lot of this news doesn't affect you or doesn't impact you, then that's a good thing. But when you look at what's happening out there amongst the population, things are not looking so good. Why is there such a big uptick in thefts? Why are we on pace to have the most corporate bankruptcies since 2010? Why are new jobless filings now up over 1 million a month? We're going to start seeing even the fake manipulated numbers start to show economic reality, and that's when people really start panicking, and that's when banks pull back even more on the lending, and then the decline really starts accelerating. So I don't see any other way out of this except for a rug pull where they just freeze everything up and the banks just go dark, and they hit the reset button, so to speak. All right, so be prepared, folks. Keep stacking. Hope to see you down here in comments in this video. Please go down to comments. There's a lot of very smart people in comments that add on to the information that I give here. So I'll look forward to reading your comments on this one as well. Otherwise, keep stacking, everybody. Stay prepared. Bye for now. Peace.